Welcome traders to this video brought to you by Admiral Markets, where we take a look at what to expect in the new trading year of 2015. And of course, in this case, we're going to take a look at the euro dollar, pound dollar, dollar yen, and Aussie. But before we do that, please be aware of the fact that this video is intended for a global audience. It may not be suitable for everyone. Please visit admiralmarketsglobal.com to find out if it is by selecting your country of residence and contacting the appropriate entity. Also, trading for exchange is considered high risk and it may not be suitable for everyone. To find out more, please contact a financial advisor, independent financial advisor, and by continuing watching this video, you agree with the disclaimers that entail this risk. Alright, thank you for your attention. Let's move over to take a look at the charts. And of course, with the 2014 trading year now completed, we have new information regarding the high, the low, the close, and the open of last year, of course. And that all is valuable information. For instance, was 2014 bullish, bearish? Was it a big wick on top? Was there a big wick at the bottom? How big was the candle in general? That is all very useful information. With regard to the euro dollar, and we're looking at the 2014 trading year, we see a very bearish candle. Why? Because 2014, opened somewhere around 135, 130. Let me take a look exactly. In fact, January 2014 here, opened around 135 indeed, had a high of 139.70-ish, and then fell for months and months on end down and had a low of 120, let's see, this is 121, I think. Let me put it a bit higher here so I can read it like this, okay. The low actually here at 120.96 and the close at 121. So basically the close was just a couple of pips off of the low. What does that mean? That means basically there was a huge big bearish candle in 2014. The low was only a fraction off of the close was only a fraction off the low, which means that there was a huge massive bearish candle with a substantial wick at the top, but more importantly a big bearish candle body with hardly any wick at the bottom. And indeed, this January already, as the market has only been open for a day, in fact, and a couple of hours, has already moved down 200 and plus pips on the euro dollar. So that bearishness indeed continuing, as I stated in a live webinar with Admiral Markets. The chance of last year's low being broken in 2015 is 90 to 95%, and actually that has already happened at the very first day. So that was a prediction that happened pretty fast. Now, what could we expect, or what am I expecting in this euro dollar, except, of course, the logical answer that we should expect more bearishness, I would say, throughout the year. Of course, the start was already bearish, but how far can we continue before we see some bounce? When looking at this bottom here, it's 118.50. So this already could be a small bouncing spot, but we could see perhaps a small bounce here. But if we break lower, I would say 113, 115, 113, 110, even parity are targets that I'm looking for on this euro dollar. To see for good entry spots, of course, we need to take a look at lower time frames like the weekly and daily chart, and you can see that basically price has just fallen and fallen. And if we put a fib on the very last swing high, swing low here on the 4-hour chart, for instance, any reaction at one of these fibs, the 50 to 61.8 here, 38.2, anywhere between 120 and 121 is where I would expect price to continue for that downside trend continuation. Moving over to the pound dollar, we see actually the same story here, a bit of a bigger wick in 2014 at the top because of the fact that the upside pressure here in the beginning of 2014 was more substantial on the pound dollar, but the fall was equally spectacular as the pound dollar moved some, let's say, 1,700 pips. In the meantime, January has seen a very bearish start here too, actually close to about 350 pips so far downside in just, as I said, at max 1.5 days of trading. So a lot of bearishness at the start of 2014, and I'm expecting pound dollar to retest this bottom here at 148 within the first few months probably of this year. And the pound dollar has already started indeed its decline very fast. Of course, if we break 148, it could be a bouncing spot, but it could be a break spot too, bounce or break spot there. And if it does break, we could see even lower 140s on the pound dollar. Now, if we take a look at the more intermediate future, we have 148, 150 as a target for the moment. And what I will look, of course, here, if you're not in the short already and haven't taken profit as yet, then waiting for some kind of retracement of this magnificent 380 pip fall is logical. So putting a fib just like the euro dollar here on this downside and waiting for price to get up to these fib levels to seek some confirmation of a turn and then trying to short it is my action plan here on the pound dollar as well. The dollar yen has an equally bullish month for the dollar, year I should say, 2014, as on the other pairs. There's just one slight difference, is that the wick at top of the December candle was about 200 pips, which is roughly close to 10% of the total year candle. And of course the euro dollar just closed a few pips off of the yearly low, and the pound dollar perhaps only about just a bit lower than 100 pips, so that equaled about 3.8%. 10% or close to 10%, of course, is a lot bigger of a wick than the euro dollar and also the pound dollar. So there is a substantial difference there. You can see that also the dollar yen has not broken the high as yet. The euro dollar, the pound dollar, all have broken the low. So the dollar yen itself, this upside was very bullish. But the wick here, the sell-off at the very end of the year, compared to the euro dollar, pound dollar, a bit bigger and therefore not as bullish as yet as compared to the EU and GU. So although overall the situation is bullish, expecting a bit more a slower upside trend continuation and maybe not as big of a trend continuation on the dollar yen as the other pairs. So a bit more cautious on the dollar yen. It is bullish. The year was bullish last year, expecting bullishness to continue. I would expect last year's high to break eventually, but it's not happening as enthusiastic as the other pairs. If we zoom into the daily chart here, you can see that price has an opportunity to perhaps go back to the 38.2 fib, which I would find a very interesting fib, and a very interesting bouncing spot here. And we'll certainly be looking for longs for my own trading from that spot. The other, of course, alternative would be a break indeed of this resistance line, and then indeed to follow through a bit later than the other pairs though to the upside. Of course, this is definitely an option for me to trade. I will be careful though with trading this. I might even wait until really the currency breaks at the top by a good 100 pips and then hooks back to the broken top before trading it. Last but not least, the Aussie. The Aussie basically opened 2014 about here, about 87.20, went up some 800 pips and then fell all the way down to about 81. So it is a bearish candle of about 600-700 pips with a pretty big wick on top here. So here too, the Aussie looking bearish with dollar strength here. Basically the winner against the Aussie as well. And I would expect the Aussie USD also to continue lower. Of course, 80, the 80 round level could be a big number to push through and could be difficult. But once it does, basically you got a lot of space until you reach a monthly bottom here at around 60, 62. Doesn't have to mean, of course, price will fall that far, but there is that pretty big space on the monthly chart at least. And what I would expect is some bearishness to follow through, just like the other pairs. And if we put a fib, perhaps we can look for intermediate targets before hitting 80, before hitting 60 or 62. Let's see, you can see 79.50, 80 could be still a bit of a difficult zone, but when you break that, perhaps all the way down to 70 could be a realistic target for the downside in 2015. When zooming in to lower time frames, we can see that entry spots here too, kind of the same story here, looking for a fib retracement anywhere to about 81, 82, but not expecting price to break through 82.20, 82.15 here, which is the top. All right, we have our first webinars in 2015 lined up for you, and that is, of course, the weekly FX recap on Monday. Then Wednesday, Nanette is going to take a look at the Bollinger Band railway strategy. Tuesday, Fibonacci wave trading, and Wednesday, intraday trading, strategy trading, excuse me. And then Thursday, understanding drawdown is so important to surviving in the Forex, and we'll explain why and how you can incorporate that in your trading. So hope to see you in any of these webinars, and wish you all very happy hunting and good trading. Cheers.